Chapter 20 Group Accounting Foreign Currency. The contents to be covered in this chapter are as follows. Group Accounting Foreign Currency. Translating the subsidiaries' financial statements. Calculating goodwill. Calculation of exchange differences. Disposals of overseas subsidiaries. Definitions. Functional currency is the currency of the primary economic environment where the entity operates. Presentation currency is the currency in which the entity presents its financial statements. Consolidation of foreign operation. The functional currency of the subsidiary and presentational currency of the group may be different. Hence, this would require the retranslation of subsidiaries' financial statements into the presentational currency of the group. Income, expenses, and other comprehensive income are translated at the average exchange rate. Assets and liabilities including goodwill are translated at the closing rate of exchange. Exchange differences. Goodwill translation. The pro forma for calculating the current year gain or loss on the retranslation of goodwill is as follows. DN. Opening goodwill. Impairment loss in year. Exchange gain or loss. Closing goodwill. Exchange rate. Opening rate. Average rate. Balancing figure. Closing rate. If the full goodwill method has been used, gain and losses will need to be apportioned between the group and the non-controlling interest. If the proportionate goodwill method has been used, then all of the exchange gain or loss on goodwill is attributable to the group. Opening net assets and profit. The pro forma for calculating the current year exchange gain or loss on the translation of the opening net assets and profit is as follows. DN. Opening net assets. Profit or loss for the year. Exchange gain or loss. Closing net assets. Exchange rate. Opening rate. Average rate. Balancing figure. Closing rate. The gain or loss on translation of the opening net assets and profit is apportioned between the group and non-controlling interest based on their respective shareholdings. The foreign exchange gain or loss on retranslation is taken to other comprehensive income. The gain or loss attributable to group are held under translation reserve within equity. Disposals. On the disposal of a foreign subsidiary, the cumulative exchange differences recognized as other comprehensive income and accumulated in a separate component of equity become realized. IAS 21 requires that these exchanges differences are recycled, that is, reclassified on the disposal of the subsidiary as part of the profit or loss on disposal. Example question 1. Parent is an entity that owns 80% of the equity shares of overseas, a foreign entity that has the shilling as its functional currency. The subsidiary was acquired on 1st January 2017. When its retained earnings were 6,000 shillings, The reporting date is 31st December 2017. At the acquisition date, the fair value of the net assets of overseas was equal to the carrying amount, with the exception of freehold land. The fair value of this land exceeded its carrying amount by 4,000 shillings. At the date of acquisition, the non-controlling interest in overseas should be measured at its fair value of 5,000 shillings. Goodwill at the reporting date is not impaired. Statements of financial position as at 31st December 2017. Investment in overseas at cost. For parent, $3,818. Assets. For parent, $9,500. For overseas, 30,000 shillings. Total for parent, $13,318. Total for overseas, 30,000 shillings. Equity and liabilities. Equity capital. For parent, $5,000. For overseas, 10,000 shillings. Retained earnings. For parent, $6,000. For overseas, 8,200 shillings. Liabilities. For parent, $2,318. For overseas, 21,800 shillings. Total for parent, $13,318. Total for overseas, 30,000 shillings. Relevant exchange rates are: shillings, $1. For date 1st January 2017, 5.5. For date 31st December 2017, 5.0. Average for year to 31st December 2017, 5.2. Required. Discuss how the goodwill arising on the acquisition of overseas should be dealt with in the consolidated financial statements of the parent group for the year ended 31st December 2017. Solution. Goodwill arising on the acquisition of overseas is calculated initially in foreign currency as follows. Consideration: $3,818 multiplied by 5.5, 20,999 shillings. FV of NCI at acquisition, 5,000 shillings. Total, 25,999 shillings. FV of net assets at acquisition. Share capital, 10,000. Retained earnings, 6,000. Fair value adjustment, 4,000. Total, 20,000. Goodwill at acquisition, 5,999. According to IAS 21, the effects of changes in foreign exchange rates, goodwill arising on the acquisition of a foreign operation, is treated as the foreign operations asset. This means that, at each reporting date, goodwill is translated using the closing rate of exchange. The goodwill of overseas as at the reporting date is therefore $1,200, 5,999 shillings divided by 5. The foreign exchange gain arising on the translation of the goodwill of overseas is calculated as follows. Goodwill at acquisition, 5,999 shillings. Exchange rate, 5.5. $1,091. Exchange gain. Exchange rate, balancing figure, $109. Closing goodwill, 5,999 shillings. Exchange rate, 5.0. $1,200. The exchange gain of $109 is recorded in other comprehensive income and presented as an item that might be reclassified to profit or loss in the future. The exchange gain is allocated between the group and NCI because the NCI at acquisition was measured at fair value. The allocation is based on respective shareholdings. Group 80% multiplied by $109 is equal to $87. NCI 20% multiplied by $109 is equal to $22.